Good morning. This is the New York City Fire Pension Fund investment meeting. We are at One Battery Plaza, 9th floor. Some attendees participate via WebEx. Today is May 23rd, 2024 at 10:11 a.m. Proceed with the roll call.
Mayor, oh, sorry about that. For Mayor Eric Adams,
Kevin Liu, representing Mayor Adams.
for Controller John Lander. Brad Lander, I apologize.
John Dorsey, designee for control,
Yeah.
Brad Lynn.
There was the slip up, Mr. John. For Commissioner of Finance, Preston Nimblot.
Fazulina, present.
For the UFA, Mr. Andy Ansborough.
Chris Viola with Andy's proxy.
Mr. Robert Eustace.
Dennis Tavetta with Bobby Eustace proxy.
Very good. And Mr. Chris Viola.
Here.
And Mr. Tavetta.
Here.
And Mr. John Young. For the UFOA, Mr. Joseph Camastro.
Present.
Mr. Liam Guilfoyle.
Here.
Mr. Sean Michael.
Present.
And for Fire Commissioner Laura Kavanaugh, we have Barbara Denberg.
Here.
We have a quorum.
Well done, Leroy. Well done.
We'll start with the public agenda.
So, good morning to everyone that's zooming in, everyone that's in the room. We have just one item for the public agenda, and then we have a couple of matters that we'll take up in executive session. So in public session, we have a very important presentation regarding the findings of the STAR committee, as well as some recommendations to move forward regarding resources and other matters. So I'm going to turn it over to two folks to walk us through that. So Kate Visconti is the Chief of Staff to the Bureau of Asset Management, and Steve Meyer, as you know, is the Chief Investment Officer. I'm going to turn it over to them to walk us through the STAR implementation, the findings, and what I expect will be a robust conversation about resources and how to move this plan, along with the other city plans, into the future. And with that, I don't know who'd like to begin, but Steve, I see you with the microphone, so we'll turn it over to you to start.
Yep. Actually, Wilfred, if you go one more slide forward, please. So maybe just as a way of background in terms of where we are. So we've actually engaged on the first two initiatives, the Strategic and Tactical Accountability Review, what we refer to loosely as the STAR project, as well as the compensation study. These are two initiatives that actually I kicked off within 2 weeks of joining the Bureau of Asset Management. I'd had the privilege of reading the Funson report, which was something that was done more along the lines of developing operational efficiencies and best practices for the Bureau of Asset Management. Problem was it was very Bureau of Asset Management centric and really didn't engage enough with the trustees and the plans. The idea between the Strategic and Tactical Accountability Review is how can the Bureau of Asset Management efficiently support and service the trustees better and have more of an alignment of objectives and goals and resources. So that was one of the impetuses for starting this process. We also initiated a compensation study because one hadn't been done in 9 years. The last raise, I think, for most of the people in the investment team in the Bureau of Asset Management was 2015. And this is obviously something that had to get done quickly under the new administration. And lastly, the Economic Targeted Investments Review, or ETI review, was something that we actually started within the first quarter of my joining in terms of, and actually Brad had some thoughts around that as well. How can we be better stewards of capital and support the local New York economy? We've got a PPAR program that's been in the works for about 30 years. That's been somewhat successful, but we really wanted to reimagine. We hired a consultant to help us get a sense for what are the other things we can do in that space. Anything I missed, Kate?
The only thing I'll add to that is that, trustees, you may remember about a year ago, we came to you with a recommendation to embark on this STAR project. In that recommendation, we asked for a trustee, the labor side, to represent your fund on a STAR oversight committee. So that STAR oversight committee was involved in the procurement, also involved sort of along the way. So thank you to that committee. And that sort of work kind of wrapped up with McKinsey around February. We then received the recommendations from Mercer around the end of March. You may remember you were all invited to a presentation from McKinsey and from Mercer on April 8th. That was really just, these are their findings. On April 18th, we gave a really high level overview of what BAM was basically recommending based on those findings. And then what we're doing here today is talking about how that affects your fund specifically. So just a reminder, I want to reiterate something John Dorsa alluded to. We're hoping for a robust discussion today. We're not at all hoping for you to vote on anything today. So our expectation is that you'll take this back, you'll make a bunch of edits and corrections, and then hoping for a vote in June.
Great.
That's all I had.
Next slide, please. Want to take it through it?
Sure. So sorry, Wilfredo, can you go back? Okay, so our hope for most of the time today is that we'll spend it on the trustee service compact. You have a printed version of that in your packet here, along with a BAM org chart. You also have it in Convene. But before we get into the bulk of that discussion, we wanted to start with a couple quick updates on two pieces of work that are not really requiring any immediate action from trustees, but that are important for you to be aware of. The first one is investment procurement. So let's start there. Wilfredo, you can go to the next slide. So Stephen Dorsey, you can jump in at any time, but so when the controller came in, when Steve came in shortly thereafter, one thing that they heard consistently from trustees was that there's a feeling that basically our public market procurement process takes too long. When McKinsey came in, we asked them to do a deep dive on this topic, and they found that the current system takes up to two to 3 years, and there's 20 plus handoffs involved in that. When I say handoffs, I mean between our contracts team, our agency ACO, and it goes really back and forth way more than it feels like it needs to. So McKinsey came up with a couple recommendations to help smooth that process. The first is to hire a BAM specific ACO, that's Agency Chief Contracting Officer. Now, the reason that's going to be helpful is that right now our contracts team will put together a contract, and then it'll go to our Controller's Office ACO for review. The Controller's Office ACO has other competing priorities within the agency. And so we will say, okay, we have 10 contracts that are ready for you to review. And they'll say, okay, we can review 2 this week and 2 next week and 2 the week after that. And it delays our process very significantly. So our hope is that by hiring a BAM specific ACO, we'll speed that process up a lot.
Yeah, much better visibility, more accountability. So again, 2 to 3 years is a ridiculous amount of time to get through a process where you go through an RFP process. Well, first we get in front of the trustees and ask if there's something, an initiative they're interested in doing. And once we have that approval, it takes 3 years to implement. That's way too long. So we're trying to tighten that down to less than 1 year. It's not just transparency, it's also accountability. So I believe on this slide, it also reflects that at some point, I'll also be the chief ACO will be reporting to the CIO, again, to increase our efficiency, also accountability in the part of the investment teams. So on the private market side, we're not subject to the same procurement rules. So we have our own in-house counsel that actually drives all that for us. We use outside counsel to facilitate those deals. Think about it. If we were to take 3 years to get these deals approved, once we're authorized to invest in them from the trustees, we'd miss all the early close discounts and we would miss the deals entirely. So we're very, very efficient. We've got Irina Tomova, who actually is our head legal person within currently the general counsel's office of the controller, does a great job. That works really well. The public side, however, just as Kate described, it's a much more inefficient and time-consuming process. So, for example, if we're dealing with, I don't mean to pick on BlackRock as a partner, but let's say we had a contract issue with BlackRock, there's more visibility and there's going to be more accountability within the Bureau of Asset Management. Us to get on the phone and call our relationship managers or people at BlackRock and say, listen, we're at an impasse on the contract. We need some help pushing this forward. We actually do that very proactively on the private side. We're going to do it more proactive in the public side. And I do think we can shorten that time frame, again, with the idea of how do we implement the will of the trustees in a more efficient way.
Thanks, Steve. So the only thing I'll add to what Steve said is that sort of those reforms that I talked about at the beginning are like already feel like a pretty big bureaucratic when we think they'll make a big difference. But we've also, based on basically McKinsey found that there are other pension systems in the state of New York that don't have to follow the cumbersome public procurement process that we have to follow. And the reason we have to do that is because of the procurement policy board rules. So we're also looking into whether there's a way to change those rules in order for us to be able to just simply follow the same process we follow for public and private markets. So that's all I have on this slide.
Next slide. Next slide, please. So consultants, so my observation since being here for almost 2 years is that the Bureau of Asset Management, the general consultant, the specialty consultants actually work really well together. So there's no issues in terms of any changes there. I think it's working well. The only thing we would suggest is there be more coordination between the specialty consultants and the general consultants. We believe, and actually we hear it differs among the 5 plans. There are different levels of engagement of the specialty and general consultants. And excuse me, what I think is really important is for more of the people that support and service your plans to think holistically about the funds. So the general consultant has contractual responsibility around strategic asset allocation. They did a great job. We just got through that process. But there needs to be more interaction and coordination between the specialty consultants and general consultants. That's the recommendation from McKinsey. It's not, it doesn't impact BAM in any way. It's not a land grab. There's nothing about the relationship other than to say, we think there's a need for better coordination.
Just out of curiosity, what is the level of that? Doug, out of curiosity, what's the level of that coordination, and how do you guys feel about?
I guess I would need more information about the specific examples they're talking about, but right now I would say, I have we have good relationships with Townsend, with Stepstone, with Axia. We have a non-disclosure agreement in place with Axia so that they feel free to send us information. We've just gone through a process on the hedge fund side where we reviewed the investment policy for hedge funds with them, and that, they included us in meetings on that. They've sent us some other materials to look through. I know the annual plan is coming up here. So we've been part of the discussion with them about the shift in portfolio strategy on the hedge fund side as we lower the allocation. On the real estate and private equity side, I think on private equity, you're going through a process where you're focused on manager selection. Roughly half the managers you guys vote on are re-ups. So that's just maintaining that portfolio exposure. The pacing plan, we review those. We don't get those in advance. I mean, I think there are opportunities certainly that we could work more closely together, but it would have to be, I wouldn't want to have it slow down the workflow, right? Because that's part of the issue that you're addressing with this discussion.
So if I can throw my 2 cents in from the trustee standpoint, just having been on this board a long time, I think that if you look 20 years ago, 97% of the assets were publicly traded and solely under the auspice of the general consultants. With the basket clause changes through the years, the sophistication of the plans, it's now probably a 70-30 split. And maybe at some points even a little higher than 30% that are in what we would consider, under the auspice of a specialty consultant. I think that as we've advanced and we've become more sophisticated, there's more of a need to just make sure that everybody's communicating, because from where I sit, right, as a trustee, not from the investment side, I don't want a situation, and I'm not saying that it would happen at this fund, but I think we're talking to all the systems about this, a situation where NEPC as a general consultant is making a recommendation on an asset class, on a asset allocation level on how something should change, and not being able to see the whole picture, right? They have an agreement in place with one of your specialty consultants now, which helps ease that, ease that. But, I think it's incumbent on us, because we select the general consultant, not just to be the general consultant for public markets, right? But to be the general consultant to generally touch everything, asset allocation, pacing plans, just making sure everything is moving in the right direction. And I think us facilitating that as a board would go a long way in ensuring that actually happens. I have no reason to believe that the consultants that we have in place at any of the systems aren't coordinating with everyone, with the other folks around the table. I just want to make sure that they're coordinated to do it in our best efforts across the board, and that everybody's moving in the right direction. And I think that it's our way, or I should say, it should be our way as a board to let the specialty consultants to know they're not the only game in town, right? And they need to work with the general consultants and vice versa, right? To make sure that whatever products get presented to us are the best for the fund and in line with not just what we're doing in the hedge fund portfolio or the private equity portfolio or the real estate portfolio, but they meet our goals as a plan that has a targeted AIR that we have to hit. And that targeted AIR isn't unique to each of the asset classes. It's for the whole portfolio. And I think that this is an opportunity to kind of just formalize that everybody's working in our direction and giving folks a clear view of everything that's going on. That's from where I sit. That's how I see this. I'm sure the investment folks think about it in a different way, but that's how I see it as trustees, how I see a slide like this.
Yeah,
That's
again-
my 2 cents.
Again, this recommendation is really more for the benefit of the trustees. It doesn't really touch BAM. The relationship we have with the general consultants, specialty consultants, is all working well. And no challenges there. But to John's point, as the market evolves and with the changes in strategic asset allocation, you're gonna have higher allocations to private assets. And if you think about the portfolio holistically, if your general consultants just focus on public markets, you're missing something. So for example, you'll have equity exposure in public equities and private equity, as well as in hedge funds, long short strategies and the like. So that's the challenge, is how do we make sure that everyone that supports and services trustees and plans are thinking holistically about the portfolio, non-siloed thinking. Again, it seems to be not a very helpful construct, and it may differ. So I'm looking at Doug, who I think articulated things seem to be working well here. But we have heard from 1 or 2 of the other general consultants that the level of interaction with the specialty consultants is not optimal. So just observation for improvement.
And just before we move on, a process note. So as you know, the consultant RFPs, like any RFP, expire. They expire next year in 2025. And so at that time, we'll be bringing some recommendations along these lines.
Do all consultant contracts expire in the same year, or they're all different? So which ones will expire?
So a typical city contract is I believe for the consultants runs 5 and with 2, I think it's a 5-year term with 2 2-year re-ups. And I think it can stretch out to 10 under certain parameters and maybe slightly longer depending on the burden to do a search. I can tell you that not every system is on the same schedule because certain systems procure services a little bit differently because they may have another fund attached to their pension fund that they might be joint bidding out. So if you think about a system that has a tax deferred annuity and a pension plan, they may be on a different schedule than the folks that are just bidding out a pension consultant. But all of the specialties, if we're bidding out hedge funds, for example, it would be, at the same time as another system that's bidding it out. So there's some coordination in that respect. A couple of systems have taken that function more in-house. And those, I can't speak to what the timing of those are. But in general, it's not as if you'll have a situation where NEPC, Axia, Townsend, and Stepstone are all done in the same year and you have no consultant, right? While we're bidding it out. That they're staggered in that sense. And I don't want to step on you guys' toes as the people who actually do it, but this is a history question.
Next slide.
Okay. So now we want to get into the meat of today, which is the trustee service compact, both the compact itself and also what's housed within it. So one of the issues that came up over and over again with McKinsey was basically that there was a little bit of a disconnect between how basically BAM felt like we were serving you as trustees and how you felt. I'll say that They did a survey and 75% of the BAM team felt that they had a strong understanding of trustees' needs and preferences and were implementing effectively against them. 25% of trustees felt the same way. So that's a pretty significant mismatch and something that quite clearly needs to be addressed. The other consideration here that trustees told McKinsey was that, okay, we're fairly happy with how things are going right now, maybe, but how do we know that 2 years from now you're not going to kind of pull away or be less transparent? Or let's say there's a turnover in administration, how do we have any sort of sense of accountability or consistency? And so the trustee service compact was envisioned by McKinsey to be a solve to those two issues.
Yeah, can I also add,
Yeah.
Kate, those are all great points. This isn't meant to be a very long and lengthy legal negotiation. We support and service the trustees. We want to make sure that we understand what's important to the trustees. So I don't know that it's on here. My eyesight's not that great, but there was an idea that we should poll each of the plan trustees to get a sense for what are your priorities for the next 12 months? And how do we position ourselves to dovetail that and support that? This isn't meant to be, well, you didn't ask us to do that, that's why we didn't do it. It's meant to make sure that BAM understands what your priorities are. I think this also leads us down a path where there's gonna be much more opportunity for customization, that we can be more targeted in terms of fire's needs relative to police, relative to boroughs and teachers. So that's part of the spirit.
Just for the edification of, there are a bunch of guys in the room that are new to this process. This has been an issue forever. Since I got here, it's one of the things that we've been asking for, and this administration, as opposed to previous administrations, has been very open to having more collaboration rather than less. So that's one of the reasons that we're even discussing this.
And Steve, let me ask you, at Wargate. So all of these things that are on here, right? These are points that are specific to fire, which we could theoretically come back and if there's things that you don't like or things that you like, have conversations about each one of these items. It's not a vote for all, we're going to put together all 7 of these things or however many there are, 2, 4. I was close. All 7 of these bullet points wind up in the final compact, if you will. My understanding is we'd be able to talk through each of those items and see if there's things you want to, I'll use the term double down on, and you really want to highlight and you really want to, dig in more on. And then there may be issues as a board that we're not necessarily that interested in, and we want to kind of tailor this to fire, right? So like, and it kind of instructs your folks on what to do, right?
It's also designed to outlive, well, no disrespect, to Brad, the controller or the CIO. It's meant to be here so that every year there's that level of accountability. And if there's a change in administration, a change in the CIO, you may not be as comfortable with certain things. You can you can redirect your priorities on a year-to-year basis.
And I might be getting ahead, but is the punchline to this that when we ask the board to approve our delegation as investment advisor, it would be along with this compact and the things that BAM needs to fulfill to satisfy the board's requirements. Did I jump ahead?
Yeah.
Okay, do you want to talk about the investment
Yeah.
beliefs portion?
Yeah, sure. I'll talk about everything that's in here, but very importantly, yes, the idea is that you say, okay, here's your delegation, and along with it, here's what we expect you to deliver. Right now, there's actually not that structured opportunity for you to make this demand.
And again, history prior to this administration, when the previous comptroller was in charge and there were some difficulties between this board and that particular administration, we used to give BAM an entire year where you had the authority to do the things that are listed on here. And we then changed it so that they had to ask us quarterly. And so I believe that this is asking us to do it annually again, and we will.
I mean, I'll say this from a trustee standpoint. We can always rescind a resolution that grants authority to anybody to do anything. The caveat with that resolution, just so we all are clear, the provision in the administrative code does not allow for more than a year delegation, and it sunsets, and it requires just to remind everybody at this board, the folks that haven't been sitting on this board long, it requires 14/24 to pass that. So, you can't check it for lack of a better definition. Those folks that are on the board don't know what that means. You can't have a situation where it ties and it doesn't pass. So, we have done it. We have moved it to quarterly. I would advocate as a trustee, if we proceed down this road and adopt the compact, to consider moving it to an annual, and tie it into this so that there's some constraints on it. With the understanding, the board can always take action the other way, right? And then, that's something that I think we should strongly consider just from a governance standpoint.
And just,
That's at a later date. We should discuss that, but I think that makes sense.
but also for the edification of everybody here, when I first got on the board, there was an incredible lack of communication between the controller's side and the trustees from the labor side. And so when Comptroller Lander came in, he included us in the search for the CIO, which he doesn't have to. It's in his purview to make that decision. And I think there could be an argument made that with these compacts, if we can affect change so that if a comptroller leaves, which they do, it's either 4 years or 8 years, you don't get any more than that. And you have a CIO who actually is doing a tremendous job. The hope is that the next comptroller just doesn't come in and put somebody in that they want from maybe a political perspective, because there are arguments that in the past, there were really good CIOs who left because of an election and not because of their ability to make us money. So it's a really important part of this, for at least for me and from the labor side, that we keep people who are doing a good job and that it's not under the purview of somebody from a political perspective.
Well, I'm glad I'm doing a good job. No, all kidding aside, look, I think that those are important things to keep in mind. And I think that a situation where we're coming back to you annually, or I should say BAM's coming back to you actually, because I guess technically they come back to me too, right? To have the Bureau of Asset Management come back to the board annually, regardless of no disrespect to Steve, whoever the CIO is, right? Asking us annually, and then also in that same meeting, showing us what they did the 12 months prior as part of this is I think what's going to drive our decision on whether or not we want to continue, have a discussion about what the parameters are, rein something in, give something, give some more discretion. I think that absent this document, we have no real way of, as a board, saying, did they do all the things that we one-off said in a meeting that we needed done? We all have notes here that we've taken through the years, and we have mental notes. I mean, the reality is that I'm sure if we looked at a 12-month period, any 12-month period, there are things that have been said at a meeting, maybe in passing, that either weren't followed up on or just went, and was said in passing and nobody really took it as an ask to go look at or do something. And I think that
but to
this
add-
holds us to that,
But to add to
or
that,
holds BAM to that.
even within our board, we do a weekly meeting and we have what we call air traffic control, which is something that I wanted to bring up here. And we write down, if you come up with a great idea and you're expecting somebody else to do that work, on air traffic control, you know who brought it up and you ask them, did you ever do anything about that? We said it was a good idea. We wanted you to follow up on it. And it's something I think we should try to include in some way, shape or form here. I mean, there are ideas that come up that
And-
fall by the wayside.
And I think Kate's going to address that in a couple of slides.
Great.
And
Actually, can you talk a little bit about
Yeah.
just the investment beliefs portion? And then we could talk more about customization. Maybe just before that, Kate, just the approach that I believe BAM has taken in the past in terms of servicing, supporting the 5 plans. Well, we look at the aggregate scale and we basically, it's one size fits all. And we tend to invest in deals or bring you deals for consideration that have enough scale to feed all 5 of those plans. That's not really the right way to be looking at it. Each plan is unique. They have their own strategic asset allocation, their own investment policy statements. And I believe through the investment beliefs, their own risk tolerances and priorities and preferences, which we really haven't focused on as much in the past. So the idea here is to have more of an ability to customize each of the plans. And candidly, you're going to manage a $9 billion plan very differently than a $103 billion plan, differently than a $20 billion plan. So this just opens us up to be able to support and service the specific needs of each of the five we're direct.
And to add to that from our side, I mean, we literally just had a sit down with our private equity where they explained that we are heavier in mega buyouts and rather than middle market and small, which traditionally offer more alpha because of that plan, because we do look at the five funds and who can fit all five funds in rather than just fire or fire, police and BERS. So definitely a part of it as we spoke through the STAR program that we had asked for as the smaller plans in the five funds.
Liam, this also gives us more focus on what's important to you. So again, we would think that if a fiduciary for all five plans, if it's a best idea for one, it's got to be a best idea for all five. That's not necessarily the case. And if we were to do a medium-sized deal and maybe do a $75 million investment, by the time it gets to BERS or fire or even police, it's going to be such a tiny amount. It won't move the dial.
I couldn't agree with you more.
So
Steve,
that's
That's what the question is, like, with the economy of scale, like, is BAM nimble enough? Definitely with seeing the org chart with vacant everywhere, clearly not nimble enough at this point to have, you have one customer, it's the five funds.
Yeah.
That's the viewpoint now, it looks
Yes.
like.
Yeah.
And it's five customers, or maybe us and PD are a customer, and, you know, three of the other funds are a customer. But are you nimble enough to get it, to put together a deal that would be at our scale? Or you feel
Sean, that's a great, that's exactly where we're trying to go in terms of resourcing. Your observations are correct about, we do have a number of vacancies, so some of that ties into compensation or in our ability to attract and retain. But if we staff up appropriately, I think we'll be able to do some really great things. We have really good people at the Bureau of Asset Management, but we've got a little bit of a headwind in terms of we have jobs to do in terms of allocating and bringing in smart investment ideas. It's all the other things that are taking more time. So I believe we need to be much better in terms of quantifying what we do, first principle thinking, what can we quantify and know with certainty and build from there. So that takes a lot of technology build. From a reporting standpoint, I think we do an okay job, but we've actually moved Dan Haas into a position. All these things are geared at providing more accountability, more transparency for the trustees. So to answer your question, right now, we're not properly staffed. We're trying to get there. And that's why some of the asks will be about additional resources to be able to again, attract and retain diverse.
I also think we'd be more of a board of yeses if the deals are custom are already being, again, not that there would never be a no, but it's currently if it's a plan that was, again, looked at as one customer centric as opposed to five customer centric, we don't want to say no to a deal, but sometimes it just doesn't fit into whatever our policy is, whatever our way of looking at the entire investment is. So we want to be a board of yeses, that it's, you put through the effort to scale it for us. We want to say yes to it if it's a good idea. If you have always our best interest, but if you have our way of thinking into your system, then it's the integration.
So you're jumping a little bit ahead.
No, sorry.
No, because I think I think that a lot of this is going to be answered I think you're making really good points, and I think that we're going to address a lot of those in a slide or two. So I just,
Sorry.
no.
Yeah.
Nicely done. Perfect.
Okay, so before we move on, I just want to lay out exactly what you have in your trustee service compact. So to your point, Liam, the air traffic control, that kind of BAM work plan content, what are we actually doing on a day-to-day basis? That lives in the work plan, which is actually the bulk of the trustee service compact. So what are we actually planning to do over the course of the next year, and how are you holding us accountable to it? What Steve was mentioning is in addition to that, that would enable more customization is the investment beliefs. We'll get into that in a second, but our ambition is that every year or when you review your trustee service compact, you would have a chance to review your investment beliefs and say, is this still in alignment with what we actually want you to be doing? And then also we'll get into, in your compact, you have an annual calendar. We're not going to talk about that in detail, but you can review it. We'll get into in more detail the other two items in bold. First one is a request to try a pilot for a joint manager meeting. We'll get into what that looks like. We talked a lot about the investment advisory delegation already, but also included in all of this is an annual corpus budget. Right now, you are billed retroactively. You don't receive a budget upfront, and so this aims to solve that. So we can get into a little more detail on the next slide. Rita will talk about investment beliefs. Okay, so as we've talked about a little bit, our recommendation is that we establish investment beliefs. This is basically a document that would live inside your IPS, and it would align us around a set of codified facts and preferences for how you want us to implement your investment. So it could be something as simple as we prefer the use of external managers, or we prefer passive unless you can make a really strong case for active. But it also creates an opportunity for customization to the point that we've been making. So other systems do have it already in their investment policy statements. You do not. So we would be bringing to you a recommendation at the fund level and then also at each individual asset class level for you to review and ensure that we have sort of specific directions on how exactly we want this to be invested. Chairman?
No, that's exactly right. I don't have anything.
Any questions on investment beliefs before we move on? Okay, next slide, we'll start now. Okay. So the next section is on the joint manager meeting pilot. So one of the things that came out during the McKinsey study is that McKinsey felt that we were not adequately supporting you to spend the sort of appropriate percentage of time on strategic topics. What you often hear, I know that we've said it, is that 90% of return variability comes from the strategic asset allocation and portfolio construction, 10% from manager selection. But as you know, right now, the way that we bring recommendations to you, you're spending almost all of your time on manager selection. So this proposal from McKinsey that we're bringing to you today is an attempt at sort of reorienting around spending more time on strategic topics. Steve, why don't you lay out what some of the
So
strategic
it
topics might
could
be?
be a whole bunch of things that I believe the trustees need to be informed on. So if I were a trustee, I'd really want to know about fees. Are we getting value for fees? Who are we paying our fees to? What does that look like on an ongoing basis? I'd want accountability for the Bureau of Asset Management on every single deal we bring in. What have you guys done to reduce the fees? And what are the fees and how do we know they're reasonable? So we are building analytics to try to get a sense for what we think are alpha or outperformance relative to a unit of fees or basis point fees. We're also trying to do that in private markets, which is a lot more work. And I know Ed Berman's been spending a lot of time on that. Also, just the counting of who your top 50 managers are relative to the price you're paying and relative to the assets managed. We're actually working on that. We hope to give you a preliminary update at the next quarterly review in June. So those are the things. Peer-to-peer analysis. How do you stack up relative to your peers? And we don't do enough of that. Portfolio construction. How do we think about equity exposure across your portfolio, public, private, hedge funds, et cetera? There's a whole bunch of different things that we believe that we have an obligation, making sure the trustees know and understand, and which I think you should be aware of. And if you think about through that, it's going to be more work for the Bureau of Asset Management because we need to be able to generate reports. We hope to work with the general and specialty consultants as well. They do a lot of really good work. They've got great perspective. They see the world from a much broader vantage point than the Bureau of Asset Management. So we're hoping to engage them as well to come to the trustees with presentations on a quarterly basis or a monthly basis. So, the joint manager meeting, the design is not to separate or not to I guess separate the trustees from their asset managers in a way that's inappropriate. It's not meant to drive a wedge between the asset managers and the trustees, which is important for both trustees and the asset managers. I should also say that not one of your external managers has ever come to us and said, "Well, this is a hassle. You guys hire us and we have to go and present the 5 boards." They don't feel that way. No one said that. So the idea is, how can we be more efficient? How can we be more efficient to tease out more time to talk about those strategic things? So we're asking for a pilot for 4 months. And we'll see how that goes with your approval. But again, the idea is to give you more content, more insight into what we're doing. A lot of that has to do with staffing as well. So I know I know you're aware of that we've hired a number of people that report within Ed's group. Ed's the chief risk officer. I've actually asked him to take on additional responsibility for portfolio construction across all assets, public and private. So we're going to be bringing a lot more analysis in terms of how we think about the portfolio holistically. And these are the things we think that will make a difference in performance. So again, kind of a different direction, more transparency, more accountability. And we're open-minded in terms of the things that you may come to us and say, listen, we'd love to see how does our fixed income positions, how do we think about fixed income exposure and infrastructure and in real estate as well as public markets. So there's a whole bunch of things that we're thinking about. But again, it's to enrich the dialogue. Just another observation, as your assets and as your allocation of private assets grows, there's gonna be more and more, and we do more customization. There's gonna be more and more managers that are gonna be presented to the board, to you trustees for consideration. Right now, we spend at least 85–90% of our time on manager discussions. And I think the idea here, if you look on the far right-hand side, is to change that mix a little bit. So we're looking at some of those other value-added things that are more important, we think.
Go to the next slide. Roberta. So the only thing I'll add to everything Steve just said, unless there are any questions, is importantly, this meeting will still exist. That's the system-specific investment meeting. We would come here, we would have these strategic conversations that Steve is talking about. The only thing would be an additional meeting that would be consistent for joint manager presentation. Yes, that's correct. However you would want this meeting to be held is how it would be.
And the pilot will inform your decision making in terms of what's the right direction. And I mean, our collective decision making as well, in terms of what works and what doesn't work. The alternative, we can just have, instead of 6 meetings a month, just have 5. But those meetings are going to need to be longer because we do think there are important elements that we need to be presenting to you. And we've already started work on what are we going to present to the trustees in September, October, November, and December through the pilot. So we're working on a bunch of different things. We think we'll add more insight to that.
It's amazing to me, but I think the only 3 people in here that were in the sim were Leroy, John, and I. And I might be the only trustee that says this, but I got a ton out of the common investment meeting because I got to see how other boards looked at investments and the questions that they asked. So from that end, I also got to meet the other boards. So from that perspective, it was excellent. It was when it devolved into hearing other people's political opinions where it went awry. And I'm just curious as to how, I mean, if we're going to do a trial, I'm interested to see it. I'm just curious how that gets kept out of it going into the future. So just from somebody who sat there.
I mean, I have to be respectful of who, I have to be respectful of who BAM supports and services. So I don't want to stifle anyone's opinion, but maybe we'll just ask it up front when we have these reviews with the managers that we keep the comments focused on their investment strategies.
Right. I mean, I know it sounds contrary to what you're saying, but have a joint information session and have 5 breakout sessions with it. I don't know if that's possible for these. It's going to go off on tangents, and that's what it seems like. It was just people posturing and making their whatever social, political, whatever their.
So I think
opinions are like.
from where I sit, and I went to many of those. I think that if we decide as a board or a collective, the 5 systems, right, decide that they'd like to go down this road, right, then it's incumbent on the Bureau of Asset Management to put together a program and figure out a way. And it's a pilot, right? The request here is a pilot, right? It's not going all in, right? To demonstrate why it's different than some of the pitfalls. And I think we've all learned from experience, right? Those of us that were around understand the pitfalls of the potential pitfalls here. But I think that what we're asking for is an opportunity to demonstrate it could in theory work again. And I think that you raised a lot of concerns that other people have raised about, what direction the boards went in after the presentation by the manager. And recognizing that I sit on 5 boards and BAM has 5 separate clients, and the idea is to maximize how we run, how efficiently these meetings are run. I think what they're looking for today, or not today, but what they're proposing today is the idea of a pilot program. And again, we're not taking any votes today, but the idea of a pilot program to see if and by the way, it's on the BAM team, led by Steve, with a lot of involvement from Kate to see if there's a way to move that forward. I would venture a guess that, different than previous iterations of this, I'd be happy to facilitate those meetings, because I think that a lot of this is about facilitating how fast they move. And I think if we have a strong facilitator, we can help move those meetings along appropriately at a brisk pace. But I think we need that element of it too. And I think that was always an issue, is trying to satisfy so many people that,
What if,
well, we'll see. Maybe I won't,
what if it was only, instead of replacing like a biannual type of thing, where it was more of a meeting of the minds biannually or something, instead of replacing the sharing of ideas then, or at least,
Look, I think that I'm happy to be in a room with everybody. It doesn't bother me, right? Because that's my regular work day. I think there's merits to a situation where we get to hear from a manager, we have our regular meeting, we do the business of the members, and then, which doesn't take which fortunately in the last 18 months has not been taking a whole day, right? We've been doing that very efficiently. To carve out a couple of hours at the end of that meeting to discuss things that are unique to fire without having to call back managers in is a better use of our time collectively. And I think that's what this is trying to get at. Because either way, we're meeting, right? We're meeting as a board either way. In my mind, we're meeting twice a month anyway. The question is, do we want one of those meetings to be with money managers and the other folks in the room? Or do we want to have 2 meetings, one of which is, our regular meeting that we're doing the regular business of the fund. And then, another meeting where we're doing investments. And I think that's the tweak here, is being more efficient with the time that we spend together to do the business of the fund.
But John, the votes will still be taken by the fire.
Correct. Here.
No, that was always the case.
Yeah, that was, yes. There would be no votes in that room. I don't even know if it's informational. I don't even know if it's a roll call. I think that somebody would have to figure that out. But I would tell you that we're gonna vote as a board. We're not gonna vote based on what everybody else does.
No, absolutely.
So,
And from my perspective, and just to pass along some information, there are some really, really good trustees on other boards who bring some really great questions and financial and fiduciary perspectives into that room. So I gained a lot out of it. It's just unfortunate that sometimes it went in a bad direction.
can I ask too, is it, so with, again, that we're all standalone boards, for the systems wish to do that, let's say we don't want to do that, how does that look? And then the other question is,
doesn't,
with
yeah.
the whole plan,
Doesn't work.
Yeah.
with the whole plan, I'm assuming there's a lot to this, that this is gonna have to be line item voting. That it can't, because it can't be, you can't have bulk ideas being yes on this. I may not like 3 features of it, but I may like 2 features of it. No, but I'm saying, if we do that, does it then make it unmanageable at other aspects? Like, again,
No.
you have your own individual,
No, I don't mean this. I don't mean this. I'm not separate from the board voting. on
No,
this plan.
because so the joint management meeting only works if all 5 do it, right? Everything else in this is everything else in this compact is tailor-made to fire, right? It's a way for fire to know they've approved BAM to do X, Y, and Z. whether it's customized, whether it's more bespoke deals, it's customization, it's whatever.
No,
else.
I
Yeah, is that
understand.
what you?
Yeah. Right. But yeah, but the compact isn't one item. The compact is, there may be
Yeah.
50 votes
Yeah.
inside the compact for us to.
Oh,
approve. We
I
may
understand.
approve
Yeah, you can
30 of the items,
Mhm.
but that may be one thing that we don't like.
say no.
So as a board, we can vote no straight on
Absolutely.
having that meeting, but we may like the customization, which may make it difficult for you to then customize if
Yeah.
we're not willing to. That's what I'm saying. There's a
Yeah.
flow chart to
Yes.
every no that we have may flow down to the fact we're not going to be able to customize as much with that no.
Yeah, I mean, it may be a little less efficient, but that's why we're asking for a pilot shot.
Okay.
Let's figure out what we can learn. So let's say it doesn't work. But there might be other ways that we can be more efficient, maybe through use of technology, maybe through some level of discretion, maybe through coordination that maybe 3 or 4 of the plans want to get together and do joint manager meetings. I'm open-minded, and I don't mean to be dictatorial. These are suggestions that we think could make us better at our jobs. And you know, the customization makes our jobs harder, but that's, so what? I mean, that's our job. And I think by looking at the 5 plans in aggregate, there are huge benefits, right? It's benefit size and scale. We're able to negotiate better economic fees. But we're giving up some of the more of some of the ability to invest in smaller and medium-sized investments that may have even better outcomes from a performance standpoint. So we want to be able to do everything.
But you said, and again, it benefits you and hurts you at the same time. You're scaling your deal only, and you're looking at it as a one customer. And and you scaled it at $100 million. But automatically, if you had looked at us as an individual, you knew you only had 75 million because we were always going to help. It benefits you, but also hurts you in scaling for the other.
Yeah. Makes it a
Yeah.
little more challenging.
Yeah, but having it explicit somewhere makes it a lot easier. Right now, we don't have it explicit anywhere where we hear things in meetings and it's just gonna be helpful, even if you're saying something completely different from another system, for us to know that and resource against it. Yeah, exactly.
So when
I'm
when
not
I,
being a naysayer. I'm just
yeah,
trying
Yeah.
no,
to
no, no.
run through my
So
head where,
maybe it'd be helpful. So when I was interviewing for the position and Sean, Brad Lander asked me, are you concerned you have 5 different plans, having worked as the interim CIO of Connecticut? I said, when I was at SSGA, we had 2,000 really significant accounts, and I had a mandate to go seeing 200 of them every year all over the world. I said, here we've got five plans that are similarly aligned, and they're all within walking distance. We can do customization. It's odd to me that it hasn't been done earlier. And again, and I'm not criticizing the funds report because I think it was really good in terms of best practices from an operational standpoint. This just makes sense to me. This is the way we should be going in terms of supporting and servicing. You know, it's also interesting too, as trustees, you're paid to think critically about everything, the investments, but also what does this mean to you? What does it change? The idea here isn't to take anything from the trustees. It's to be better at our jobs and supporting and service.
And in full disclosure, they're all within walking distance. It's been about 5 years since I've walked over the Brooklyn Bridge to Nicers. So I just want to make sure the record's clear.
yeah, I was gonna say,
Yeah, no, I've been there. I just haven't walked. I just want to.
Okay.
Did I say that out loud? Sorry.
Okay. You can move on. We basically. covered it. Oh, this, yeah, go back one, Wilfredo 13. This is important. So we're, in order for the joint manager meeting to work, we would send you, sort of everything up front in advance of the meeting, including a list of managers, so you can be fully prepared going into the joint manager meeting to know exactly what you would be reviewing there and then eventually being asked to vote on at your. So, just an important process.
Kate, the other thing that we haven't talked about, that's not on the slide, is we are going to come up with summary recommendations as well. So we recognize that not everyone has time to read a 35-page
Yeah.
So we're actually trying to get it down to
Very
just like
useful.
1 or 2 pages. Actually, Ed Berman put one of the old deals, I shouldn't say this, but in his own personal chat GPT to see if it's, it didn't work well, but we think we can get there. And we think that technology can be a helpful tool for us as well. But again, to be able to provide you with summary details, and again, things that are focused on fees, fee savings, portfolio construction and fit, that's specific to buyer's plan, not in aggregate.
And
And our
I-
ambition,
no, I was just gonna make a point. This is one of those instances where a coordination with the consultants, I think, is key amongst the systems, because we would need to have the data well in advance of the scheduled meeting. So that's something that if we talk about that as a board, we can kind of set some internal deadlines about when we would need to get the information, because we're trying to maximize the time that we spend together. So this may be one of those areas where when we have the conversation about streamlining or making sure that the consultants are all moving in the right direction, making sure that everybody needs to get us stuff, and this goes across the 5 systems, right? Gets us all the stuff in a timely manner so that you can walk in, because when you see monthly packages, I just want to remind everybody, the monthly package isn't just what BAM tells you is in the monthly package, right? NEPC sends in stuff, Axia sends in stuff, Stepstone sends in stuff, Townsend sends in stuff. All of that needs to be in your possession prior to walking into that room to maximize your ability to ask questions or understand what's going on. So I just wanted to make that point.
I can add one more quick thing. The cover note, one of the ambitions in that cover note is to more explicitly link your strategic asset allocation with the managers we're representing. So right now, you approve your strategic asset allocation, then we bring you a manager and we tell you the merits of this manager in isolation. I mean, we do some contextualization, but our ambition is to make it a lot better and a lot stronger. So you say, okay, I understand exactly how this manager fits into my overall portfolio and why it is being.
Right.
Yeah. Ready to move on to budget?
Take it away, Kate.
Okay. So before we get into the proposal, we just want to level set on the current state of Corpus. So right now across systems, the current budgeted headcount is 70, and BAM has an annual budget of 11.1 million. That's post managerial raises. But what you're looking at, but what is an important note is that the org chart that you have is our proposed org chart. So you're seeing a lot of vacancies on there in part because it includes a number of positions that don't exist yet. So that's an important flag, but this is the sort of context of where we are right now. The only other thing I'll say is what we touched on a little bit before. Right now, we have basically a budget that is our sort of assumed budget. It's the annual budget that we kind of have that we've maybe always had, and then we're being you as trustees are being billed against it retroactively, but there's no structured way for you to weigh in on the budget right now. So that's what the proposal is.
Yeah, if I were a trustee, I'd want to have some say into how BAM is spending their money supporting my fund.
And have it linked to a work plan.
Yep.
Which is the idea. So, Wilfred, you can go to the okay. So
And I'm sorry to interrupt. Just to give some perspective to our side, if BAM operates more efficiently and has a better team, and that results in even just a 0.5% of a better return on $275 billion would more than pay for whatever additional monies we would give out in corpus funding.
And I think that should be the requirement. Like I think there's a number of things we're working on and we think can make a positive impact on the portfolio over time. And the idea is to generate higher and higher returns. Someone asked me the other day at one of these meetings, what's the essence of what you're trying to do? Trying to improve performance. First and foremost, that's what we do first. And how do we do it efficiently, effectively, and targeted for clients?
So just to add, BAM does bill the systems 5 times a year, once each quarter, and then one time we do a true up, which is usually just the whatever came over the end of the fiscal year. So we do send a bill, and I know that they do look at it at the fund before the fees get dispersed. But the way that it's done now, absent all of this stuff that BAM is trying to fix here, is after the fact, we bill you, right? So we've spent the money, we bill you, and then the money gets transferred, does whatever happens to make that whole, gets put into the expenses, whatever they do to do that. But it's after the fact. This plan gives you a better handle annually on what's being done every year, so that when the bill comes, you're not surprised at what the numbers are. And to be fair, I don't think anyone has ever been surprised. but it doesn't make any sense that we wouldn't know ahead of time kind of what the ballpark is. This is a better way, I think, of laying it out from a trustee board oversight standpoint. And taking some of the administrative burden, putting it on the Bureau of Asset Management to tell us ahead of time. And we know at the beginning of the year what we've kind of allocated in our minds. So I think that that's the key difference that I see from the board standpoint between a proposal, this type of way of looking at it, as opposed to what we do now. Cause I just want to make sure we are very transparent about how much is being spent on Corpus, but this way we know in advance going forward what the expectation is, rather than the other way, which is we kind of get told after the money's been spent, what we spent the money on.
So the only other thing, or do you have a question? Go ahead.
Corpus is scaled not based on, to make the math,
It's-
it's not divided by 5, it's based on.
No, it's based on
we-
assets at the end of the fiscal year.
Yeah, so it's based on your AUM. Also, you have hedge funds. It wouldn't make sense for other teams, other systems who don't have hedge funds to contribute to that. So that's the only real exception. But were there to be more customization, we could look at sort of adjusting based on that. It wouldn't be a flat pro rata based on AUM necessarily. But that's how it's done right now. Yeah. Yeah. So I also want to make one point, which is that I think there's two actually distinct recommendations here. So the first is that we put the budget in the trustee service compact annually, and that's what we've been talking about. And then the second one is a request for increased resources that we're bringing to you right now. But regardless, were you to say no to the increased resources, we still would love to present to you the idea of keeping that process in the trustee service compact.
Yeah, it's
So-
meant to be a more transparency and accountability. It's not that we come through every year with an ask. Well, next year we're going to come and ask you for even more. That's not the idea. It's to give you guys transparency into what you're being billed for ahead of.
Okay, so getting into the latter part of that, which is the actual ask for this year. So as I mentioned, right now we have 70 folks on Corpus. Our recommendation for this year, based on McKinsey's findings, is to increase the head count to 127. That is specifically Corpus. We also have a lot of folks, myself included, John included, who work in BAM, but who are funded by city tax levy for a variety of reasons. If you include all the city tax levy folks, the folks in gray on your org chart, it would be 163. So the reason we're asking for this increase in headcount, there's sort of three main reasons. The first one is that our AUM is growing. So as our AUM grows, we have more private market deals to due diligence, and our staff gets more and more stretched over time. At the same time, we have this new asset allocation with, thanks to the basket clause, a little bit more freedom to invest more in private market assets. Again, that just raises the sort of due diligence required. And then finally, it's actually not reflected in here, but it could be, is were you to say, okay, we want you to due diligence X number of deals in X asset class specifically for fire. This could be a place where you could say, okay, we're willing actually to provide more Corpus funding in exchange for this increased customization. Right now, that's not included. Yeah.
Just to play devil's alley cat, for someone who would say that our consultants could do all that diligence without BAM doing that diligence, what's the answer to that?
Thanks, Steve. Take that one.
Yeah, so, I do think in terms of the investment outcome and the investment product, you want to have something that's unique for your plan, your fund. And I don't mean to speak badly about any of the specialty or general consultants, because they're really good at what they do and they're an important part of this process. And we value their partnership, but you don't want your fund to look like everybody else's. And if you simply rely on an external one manager to find deals and due diligence those deals, I don't know that you're going to get the best outcomes. We do think there's a need for differentiation, customization.
Thank you.
And I just want to highlight one thing that was said, because I don't want to gloss over it. If you look at the org chart, Allison and I are in gray, right? We are not Corpus funded. So the folks voting on this are city funded folks. And I want to make that abundantly clear to folks, to clear up any confusion on that matter. So that's on the org chart, that's spelled out. I just want to make sure that that is clear to fellow trustees in the room, that we are not beneficiaries of Corpus. We are city-funded employees.
Okay, so moving on to bullet number 2, or sorry, Wilfredo, can you go back? Thank you. Yes, the first part is raising the headcount based on McKinsey's recommendations. The next part here is, as Steve mentioned at the top, we conducted a compensation study, or I should say our HR department did. And so we have brought to you today some recommendations for raising the salaries of the team members based on that compensation study. The last thing is reallocation of team members to Corpus funding. So maybe John can say a little bit more about the history here, but my understanding, just from what I've been told, is that back in the day when Corpus was established, it was felt that we should keep a core set of people on each team on the city tax levy side, just in case Corpus doesn't work out. Now, it's been a very long time. Corpus has worked out. So we were thinking that we would use this as an opportunity to rationalize any teams that are truly working for the sole purpose of the benefit of the pension funds to actually be funded by Corpus rather than city.
So just to echo what Kate just said, early on at the dawn of Corpus, and when I was first hired in the controller's office over 20 years ago, I was one of the first people that was actually hired under Corpus. So I'm kind of familiar with how it works from the early portion of my career. There was a belief at the time that it should supplement what was existing in the event that it didn't get renewed or it went away. To Kate's point, it is clear that it's not going away. The concept of using 13-705 of the administrative code, which is what is commonly referred to as Corpus, and how we can pay for this, was the first time that it was being used in this manner. So these are not administrative expenses; they're investment expenses, and I think that that's the key thing to understand. Is that when we're talking about the Corpus piece, we're talking about the investment expenses of the fund, and all of those people that are listed here in blue work for the exclusive benefit under the IRS rules, the exclusive benefit of the retirement systems. So their job functions are not broader controller functions. They're simply, if they're doing private equity, they're doing private equity solely for the pension funds. And I think that that's the key thing that that folks should understand, is that as we've shifted, as the assets have grown, and there's more of a need to keep an eye on the investments internally, that's why you're seeing more of the gray spots turn blue, and why it makes sense and why it is wholly within the auspices of 13-705, which is in the resolution that grants us. It's not just in the administrative code. We actually acknowledge that in the resolution for Corpus funding, that these are investment expenses that are for the sole benefit of the fund. And as we've increased assets and complexities and asset classes, it only makes more sense that that number of people that are affected by this would grow. That's my take from a historical standpoint. Again, Steve's the investment leader of the Bureau of Asset Management. Kate's the chief of staff. They know much more about the ins and outs of this particular plan, but that's the history of how we got there, and why it makes sense. So.
Thank you. The last point I'll make on this slide is just to your point, Liam, Sean, others on value for money. What we're asking for here is approximately 1 basis point of your total AUM. It is a big increase. We want to be transparent about that, but all in all, it is 1 basis point.
Question.
Yeah.
So that's increased to 1 basis point or
Increased
increased by
To 1 basis.
No, two.
Yeah. Yeah. Okay, you can go to the next slide. Okay, so this is just a visual representation of what we're asking for. So it would be 2.3 million for fire specifically. In some that across systems, the Corpus budget we're asking for is 2.8 million. Again, 2 million roughly of that is coming from fire. That's the request. And then to the point that John has just made, and we've talked about quite a bit, there are folks who are city tax levy who work in BAM. That's where you see the 34 million. That's includes city tax levy. So that's not folks that you're paying for, but just for your awareness, we exist and we're working in support of them.
And again, this is again, more big picture. Seeing what our portion is, which is, only a very small portion of it, compared to there's only 5 people contributing. Is there concern, I'm looking at bigger picture, is there concern that you're gonna have trouble getting buy-in from the other systems? Or our system that may not have the same salaried workers that that are in the scale that most of us are in?
I'm curious what others think. So far, I think that we've actually
It's been
received
well?
some pretty reasonable. I think folks understand the idea of value for
Value for
money.
money,
Yeah.
that's what I was gonna say. Are you getting value for money? And it might seem as though you are, so the one thing we haven't done, because there'll be so many assumptions, is what are we actually doing to generate incremental return? There's a number of things that we're working on that. We can perhaps present that at some point. But I believe we should have an obligation of improving the probability of surpassing your 7% actually assumed rate of return on an annual basis, and we're working towards that. So if you think about it this way, Sean, an extra 50 basis points relative to yours or any of the plans, it's a massive amount of money up the $275 billion base. And that's what we should be doing. At every turn, we look, how do we get better fees? How do we get a better performance? How do we think more constructively? I touched on an issue earlier that came up around just some project for ETFs. We've done some analysis that looks over 2 years, just as a liquidity tool, not investing in ETFs per se, but just as a liquidity tool. We think it saves an aggregate across all the plans, $148 million a year, just in terms of how we manage the liquidity in your fund to make sure that we have the bare bones of cash on hand, and you're allocated toward your strategic asset allocation. These are small, and again, this is just a concept that we're going to present at some point, but there are a number of things that we're working on in terms of how can we improve it, even portfolio construction. Are we getting enough out of our active share? Are we paying too much fees relative to the benefit we're delivering? Some of that has to do with portfolio construction and approach and our procurement process.
And again, you have mental, again, weird to say mental buy-in, but you have mental buy-in. I get it, and I get paying people more. I believe generally is gonna drive them to perform better, and will, drive you to expect more from the people, or everyone to just whatever, drive each other and get, and not that, because I think it was kind of sounded like I said last time, you don't have good staff now, just that the staff will, as you bring more people in, it'll drive everyone to work harder and put the best product, which in the end of the day is alpha for us, which is not saying all we care about, but it's one of the main drivers of our concerns. So yeah, I get it. I was just curious. There was concerns that others may not see it from the same lens.
Yeah.
No, I think Kate's right. I think we've gotten pretty good feedback so far. Again, I think we get the benefit of the doubt because we've been credible and we're doing what we said we would do. And I think the expectations are there'll be more accountability on the part of BAM towards the trustees that would be helpful.
Yeah.
Sorry.
Yeah. The only thing I was going to say to what you're saying, I think actually, we do have really great people who are really dedicated, and actually our turnover rate is not crazy, but to your point earlier, our vacancy rate is.
Yes.
And
It always
I
has
think
been.
you were stepped out, so I'll just say for your benefit, you're also seeing more vacancies because this is our proposal. So some of these positions don't exist yet. But even if we were to take the new ones off, there are a lot of vacancies. So we have right now 110. We're budgeted for 133, and we are over and over and over again told that I just can't take this out.
Yeah, I would echo that. We do have really good people, but we're not fully staffed. So when I was interviewing for the position, I got on the website and I counted the number of vacancies. There were 26. Pretty much there right now.
Yeah,
We've
23.
had, some really good people come in, really good people leave. Part of the reason I think we're able to attract and retain is a couple things. So we're going to talk to you about potential salary increases for the team, and we'll go through that in some detail. It's not all about the money. So I think there are two things. The fact that we're going through this process review independently with a consultant to look at compensation I think it's kept people in their seats, but it's not all about the money. It's also about giving people within an organization voice, opportunity to grow and stretch, promoting from within. There's a whole bunch of things that we do to improve communication, develop a real sense of team and purpose.
And if you can have a great employee who's over work, you just can't be great.
Yeah.
When he has the support staff, he can become great based on great people.
Yeah, we're at a point where, and I said earlier about a headwind, it's really, and I don't mean to suggest that we're spinning our wheels, but there's just so much to do on an ongoing basis. It's hard to make a difference in the things It's hard to do the things that are gonna make a real difference in performance over time. And again, we should be looking at how do we generate another 50 to 75 basis points of return across the plans consistently.
I think we have a
So
motion.
I just know, well, firsthand here at the fire fund, the process of job postings, interviews, hiring, resumes, salary, offers. How optimistic are you to get to 127 and how quick do you think you can get to 127?
I mean, that's a great question, and it's actually 163 if you include the city, but yeah, so I'm pretty optimistic. I think we do hear over and over and over again that the salary is the limiting factor. So I do think that that will really quickly unlock a lot of great talent. We're also working on improving our recruitment strategy. So we have a list of sort of sites and associations that we are starting to build better relationships working with in order to do that sourcing. We're also, though, I believe that their city tax levy, so you wouldn't be paying for them, but in our budget, in the 163 is included a recruitment and training director, in part because right now we don't have anyone dedicated to recruitment and building up staff capacity and basically running trainings. Even within the controller's office, there's one person dedicated to that within the 800 people. So we need a BAM specific person, and that's included here.
Yeah, can I also maybe answer it a little differently, Leroy? So when John and I were up in Saratoga last week, we had a really good presentation to a number of the retiring firefighters officers. And one of the things we did talk about is, obviously there's some really good plans out there, CalPERS and CalSTRS and teachers in Wisconsin. There's some really good peers out there. I don't want to be second best, and I don't think that's the employees of the city of New York deserve anything but the very best public pension plan system in the country. And I believe we can do that. I think we've got, like I said, I think we have really good people. I think we've got an exceptional controller. I don't know a lot about the past history, but I think we're in a position where we can really make a positive difference. And that's what this is all about. How can we be the very best plan out there? I don't like to be second best. I didn't take this job to be second, third, or fourth. I think that we can do a better job.
And I think to your point, Steve, and I think the way we said it to the retirees is the FDNY is the premier fire department in not just the United States, but also in the world. And to be fair, you deserve to have a pension fund and an investment staff that's at the same level that you guys are, in the sense that when people say, what's the, when they think of a fire department, they think of the FDNY and the Red Sea Grave truck that drives down the street, right? They should be thinking about when somebody says, what's the world's best pension fund and how is it run? They should say it's the fire pension fund, or anyone. I'll take any one of the five of the retired systems, but they should all say our investment staff is the premier investment staff in the country. We are mere blocks away from the financial capital of the world on Wall Street. We owe it to not just your members, but to the members of the five retirement systems that we have the best, or I should say that the Bureau of Asset Management has the best investment folks. And I think that we owe it to ourselves as a board to hold our heads up high and say that we have the best working for us. And that's kind of how I think about it. And that's really along the lines of what Steve said. Like, people when they think about what is the best pension fund in the world, we should be in the conversation. And I think we have been for years, but I think that in order to get, you can always get a little bit better. You can always improve your position, right? I think that we need to take that into account and figure out how to get there. And when we talk about comparisons in a slide or two, and we talk about comparisons to other plans and other municipalities and other state plans, it's clear to me we really don't have an equal. On the city level, we certainly have no equal. There are only two plans in the country collectively bigger than the five systems. And we used to be the seventh biggest, and now all of a sudden we're number three. And that says a lot about the decisions that we've made as retirement systems. But we should be the ones leading the pack. We shouldn't be following the pack. And I think, Steve, you're 100% right. You don't take a job to be second best, right? You take a job to be the best. And I think that's the goal here is how do we be the best? So that's my 2 cents. And again, you know, these guys are doing the investments and running the Bureau of Asset Management. I'm just kind of observing that piece of it.
Very inspiring.
I thought he was gonna say it was eye candy.
Okay. Very inspiring. Can we move on to 18?
Who's gonna win number one, Kent? Before we leave? Yeah. Bring it in. Right.
Okay. Yeah, I can a little bit, but Steve, I think you should provide some, feeling good. Okay, Steve's gonna provide some color here, but as you can see, the basically 3 things that we talked about before, the current folks on Corpus, the new resources that we're requesting, the folks we're requesting to shift onto Corpus who are currently paid for by city, where we would argue that doesn't make sense. And then the total. So as you can see, the bulk of it is in the investment team. But we also have some folks that we're adding on in legal and whatnot. So Steve, I think
Yeah,
should
just in terms
provide
of
some
that,
color.
if you look at the new resources requested, it predominantly is the investment team, 14, that's spread across private, mostly private, but also public assets. ETIs, we're trying to reimagine what we do there to be more effective and more profitable, service and supporting those initiatives. Risk management, there are actually 3 folks that are in risk management. 2 that were reporting to Ed's group and 1 that reports specifically in financial reporting and developing heavy analytics to be able to present to the trustees what we do and how we do it. That would report into Dan Haas. And then lastly, an additional strategy for emerging manager strategy in Cafe. But a modest ask, and again, a focus on those areas most important delivery.
And Steve, I have a question. With these new resources dedicated to ETI, to what extent do you think you can expand the program and raise the assets invested in?
Yeah, that's the whole intent. We're trying to figure out, reimagine what that would look like and how we could be bigger. And we actually hired a consultant that actually came in and made some recommendations, but it's an elevation of those functions in-house. Again, without compromising investment return, what can we do?
Would you be looking to get above the current target, or your main goal is to get to that?
We've never been at the
So
current
far,
target
right
yet.
now.
We know that.
It's
so-
hard to scale. Our PPAR program is really well managed by Chris Pack, does a great
Right.
job. But it's
Yeah.
with 1.2 billion out of, it's supposed to target 2. We've never gotten there. And I spent a lot of time and even just, at nights going through documentation that supports a $3 or $4 or $5 million investment. It's small, it's not really scalable. So I do think it's really healthy to reimagine what we could do differently in that space.
My position is that we strongly support the expansion of the ETI program.
Great.
Just out of curiosity, and this may be off topic.
No, yours not.
No, you're up.
You sure? Okay. I have a question about the headcounts for the investment team. So why proposing for 14 additional staff when you already have 9 vacancy within the investment team? Because that 9
Well-
vacancy represent 30% increase. in
Yeah.
the current.
That's a great question, Kevin. So I think if you looked at where we intend to go and how we want to do more customization, small to medium-sized deals that are specific to each of the 5 plans, but it's not to say we still won't bring deals that are appropriate for all 5. We definitely will. But it's to really get to a point, if we can get the salaries right and attract and retain people, we think that's the optimal level of staff. Let's be honest, there's no organization that always doesn't have some level of vacancy. It's usually 10% or so. But
Yeah, or more than double.
In terms of because we know that Mercer's ran a study on the compensation levels, but in terms of comparing the head count to your peers,
Yeah.
what is this?
McKinsey
Yeah, so
did that,
McKinsey
yeah.
did that. It's in their full recommendations, but also Wilfred, if you can flip really quickly to slide 25. They actually did a pretty sophisticated analysis. So they worked with CEM, who does this kind of research professionally, and they ran a regression that said, okay, what are the different factors that contribute to how many staff you should have? One of those factors is your AUM, the complexity, how much internalization you have, all of these different things. And they have a pretty sophisticated formula that doesn't just compare us to peers, but compares us to peers in a way that's scaled up or down based on AUM.
Would this headcount be comparable to a plan that has assets managed externally mostly?
So no, yeah, so they basically said, is the answer to your question. So basically they said, what is the additional headcount you would need if you were managing internal. What is the additional headcount for additional AUM? And they have this formula or methodology that adjusts for all those things. So they would be comparing us to internal folks who do external management.
Yeah, it's similar to. it's Not gonna get to the team tomorrow. It's gonna be a process of
That
Definitely.
building up. It may take
Totally right.
3 years to get to
may
14.
take a while,
to
yeah.
Get the right people. That's- 14 people aren't showing up Monday to.
We don't even have the seat.
Right, yeah.
fill the role.
Be great, but
So
no.
it's
Yeah.
it's the mission statement of where you'd like to get to. It's-
That's exactly, you build a team, you
Right.
fit who's got what skills and you bring them in over time, you know.
Now, can you guys operate in a system of, I'm saying using, it sounds terrible to say, farm team, that BAM's a farm team, but promise of, this is a resume builder, you're here for 5 years and we're gonna farm you off, then you can go to, not that you ever want to leave BAM, but Morgan Stanley will come home because this is where you're the young, talented, you
Yeah.
know,
I don't have any problem with that, Sean. I don't want people to come in 2 years and flip.
Right.
But if people come in and they're engaged and they're working hard and they're making a difference, I mean, they're not indentured servants, right?
Right.
So I don't mind that people come in and get trained and get this great exposure and leave after 3 or 4 or 5 years.
Nobody really considered, you're the number one
Yeah.
system, if
Right.
you are thought of that way, that this is where you go,
Yeah.
where you go to cut your teeth, or whatever you want to say, is,
Yeah, I actually think
does
it's a
that
great,
model work for you?
I think it's a great place now. I think it's only
Yeah,
gonna
but I
get
don't know
better,
about
but
this.
yeah, it's in terms of your visibility and what you get to see and do and think
I
about.
see Dorser, and I'm just not sure.
No, but you know what? Look, I
Particular
also think I think it's also a generational thing in the sense that a lot of people at this table have 20+ years with the city, right? There's a lot of us sitting around this table that have 20+ years in the city. If you look at the cities, like DCAS, I think puts out a report every year about the workforce of the city. And I think if you looked at that 10 years ago versus today, a lot less people are staying 25 years working in government or working in the same place.
I tell you,
And I think that's just I think that we're never gonna overcome a generational shift in people doing shorter stays in places. And I think the efforts that the state made when they changed the vesting years,
find that if-
what was really what was kind of driven by the fact that people were not spending, doing 10 years to vest, and they shifted some of the plans to 5. And I think that that's more of a reaction to the fact that people are staying places shorter. So
And some level of
it's interesting.
turnover is actually healthy, because you bring in new blood, you're able to, but the way you retain people is you compensate them fairly, you treat them with respect, you give them voice, you move them up, you give them opportunity for advancement. Even some simple things like the thought leadership speaker series we have every Friday. If I'm a younger person and I'm just out of college or grad school, and it's an incredible opportunity to get to see and hear from some of the very best investment minds on the planet. We also are pretty inclusive. We have anyone that wants to within the Bureau of Asset Management. Every single person that's there can dial in for the investment committee meetings. So it's a great way to get educated, to think holistically about the portfolio. If I'm an equity specialist, I can focus on anything. I can learn about everything. So it's really a great place to work and get exposure to all these different things.
Could
Yeah,
you
yeah.
set up like the compensation plan where they have to invest into the portions of it, almost like a term where you have 3 year, 5 years, so you have full buy-in at the end, so it's after the 5 years, but
Yeah.
I don't know if that's even.
It's hard to do. It's hard to do. And in fact, any recommendation we'll have is just around base salary
Yeah, yeah.
adjustments, not a bonus plan. Those are hard to do. I do think that process has
I'm
tended
thinking
to
about
bring out the
quitting, so
worst.
I'll let you guys.
Yeah,
Big
yeah,
comfortable.
yeah. I don't know that we need to go there.
Okay, should we move on to more detail on the comp?
Yeah. yeah,
Okay,
yeah.
next, Wilfredo, can you go back to 19? Okay, just very quickly, the way that we are interpreting the Mercer study is, basically the Mercer study gave us data comparing us to peers at the 75th percentile and 50th percentile. They compared us to government, financial services, endowments, foundations, but most importantly, public pensions. We are, where Mercer provided us data that compares us to other public pensions, that's the number that we're basing our recommendation off of. And where they didn't, we chose the lowest of the rest of them. But as we'll get to in a second, we're not just taking that number, we're also adjusting it based on a number of factors. So Mercer made the case when they did the study that we should be pursuing the 75th percentile, given that we're the third largest in the country collectively. Also that our structure is very complex and that a lot of other public pension funds have incentive programs, which we don't have and we're not asking for. We think it's too logistically complex, but to make up for that fact.
So our biggest pushback to this point is that when estimating 50th and 75th percentile, Mercer didn't seem to account for the fact that a lot of our peers of similar size or greater, they have much lower investment management expenses as a percentage of overall assets. For instance, CalPERS in the last fiscal year, they paid out around 600 million less in investment management expenses, while their assets were about 70% higher than. I think it was in line.
It was fine. Well, and let's not,
Right.
I mean, I don't mean to criticize CalPERS, or it's really a well-run organization.
Just as an example, so we didn't do a proper study, so we're not arguing that across the board. Although if you look at just industry averages, we're also a little bit higher in terms of percentage. So that's the point. So a lot of a lot of our peers, while they do pay higher rates to their investment teams, they have measures that offset overall investment.
They manage
management
more
expenses.
in-house.
For instance,
Yeah.
Texas TRS, last time they proposed an expansion to their budget, they also proposed measures that would reduce overall fees. So we calculated that per new employee, the overall savings were about $3 million a year. So unfortunately for us, from our standpoint, we're not in this star proposal, we're not seeing any offsetting measures.
Yeah.
That's kind of our criticism.
Well, we're obviously trying to be more transparent and accountable around fees. Those are all good points. I think the bigger issue is how can we drive performance? People matter, and good people will make an outsized difference in terms of performance. That's hard to quantify. I can come in here and tell you we're going to generate another 1.5%. It's not credible, although we should be able to, over time, articulate exactly what we're working on, what we think the benefits will be. Small things. It's a constant focus on how do we get better at everything we do. Yeah, but there's also the argument that some of the peers that we are compared to manage a little bit more money in-house. A lot of that's passive. We do manage some money in-house. We've got our cash position, which is actually non-corpus because most of it's the city's money. We manage, I know Petra does all the underwriting for co-investment infrastructure. We've got ETI, which is nascent. We think we can be doing bigger things there. But I do think if you're a really good asset allocator and really good at picking managers and really diligent in terms of how you process and manage those portfolios, you can make an outsized difference.
Right. So our standpoint is that we shouldn't lose kind of sight of the fact that our investment management fees remain very high compared to the industry. And going forward, maybe that's something.
Yeah, I think, so I think part of the challenge we have is how we quantify all that. And I really want, again, first principle thing, what do we know for a fact? What are our fees? And again, we're trying to provide the boards with a lot more transparency around that. That'll start next month. In June, we intend to come with an analysis of your fees and accountability. So what are we doing every year? If I'm a trustee, I want to know, what are you guys doing every year to get my fees down? The management, the existing mandates, re-ups, what are we doing at every single turn to reduce those fees?
I'm going to move on to the next slide.
Just in terms of our methodology, we looked at 3 compensation principles to really drive what we do. We want to be competitive from a standpoint of being able to attract and retain people. We actually are proposing a flattened distribution. So if you look at this, the CIO, I happen to be the CIO today, I'm going to be here for a long time. But we did flatten, we reduced the level of the CIO compensation. Those positions, Liam, to your point earlier, tend to turn over more. And a lot of that has to do with the change in the controller that hopefully won't occur for some time. But we really tried to focus more on the asset class heads and the senior investment officers in terms of compensation. And the last point is we also recognize that we work for city government. We recognize that we support and service beneficiaries and participants, most of whom are the vast majority of whom are union employees. So we wanted to be reasonable with the request. So again, on average, Mercer made the recommendation given the size, complexity, New York City, we should target the 75th percentile. We actually are proposing to target slightly below the 50th percentile. They'll look like big numbers, and in many instances they are compared to other workers in the city. But why don't we go ahead to the next slide?
I'll just
I'm
make a
sorry,
very
sure.
quick point here. I won't belabor it. You'll see 25 roles on the next slide. We have obviously a lot more folks in BAM than that, and we're proposing even more. Each of the roles within BAM is mapped to one of the positions that you're seeing on the next slide. So it's not that the positions that you're not seeing are not included. It's that they're mapped on the back end, both for efficiency and actually conducting the compensation study in terms of procurement, but also just to create some sort of standard levels and equity across our bureau. So you can go to the next slide.
So this is actually the proposed salary by role. You can see it starts with the chief investment officer up top, all the way down to the general counsel, or the lawyers that actually support mostly in a private market perspective right now. The proposals are actually in the middle in the green, and you can see those dollar amounts. Now, to the right of that is the analysis that Mercer did. So on the far right-hand side, it talks about targeting the 75th percentile. Then slightly to the left of that, it's a 50th percentile. So for example, not to pick on the CIO role because this is so uncomfortable, but if you look at the 50th percentile proposed, what BAM is recommending is base compensation and total compensation of 550,000 is, I'm looking at 227,000 below the median, below the average of public pension plans and other similar types of positions. And there's a reason why I talked about flattening the structure. That's more red up top. Again, we tried to focus more on the areas we can really drive performance over. DCIOs, asset class heads, and the senior investment officers really want to be able to attract, retain for a long period of time. That'll make a significant.
Any questions on the next
There's a
slide?
lot of information. There's a lot of detail on that slide.
Just to be a bit of a pain, I don't see chief diversity officer in there. What's that salary?
So that's Taffy, for example, that's she's a director of DEI and emerging manager strategy. She's mapped to senior investment officer. But, oh, yeah. Also,
So
very
I just want to
important,
remind
yeah.
folks, city jobs are the discretion of the controller as an agency head. So the request is not for additional resources on the city lines. It's solely on what's in blue, which are the corpus lines. So I just want to make sure that,
Very important
yeah.
point.
yeah, that is an important point.
Kate, is there a slide that actually breaks down like the expense relative to the positions overall? So
The next slide, is that what you mean? Let's
Yeah.
see. This one?
yes.
Okay.
You can see again, the investment team, was the line where the money goes appropriate. There's another slide though that I think actually breaks down, no. Yeah, this is.
Yeah.
Well, the investment team, but don't we also have the breakdown of the number of aggregate compensation relative to positions?
That's this.
So we had
I think.
SIOs, asset class heads.
Oh, no, we have it by role. We can definitely get that
Yeah.
though.
It would just illustrate the point where we're trying to pour money into the belly of the curve, more senior investment professionals that are not typically political and they don't turn over this much.
And so just, if I'm reading this correctly, what's the additional corpus that we're looking for total?
If you can you go back to 16, Wilfredo? So right now, so the total is 2.3. That's not the additional. Right now, you're below 1, so it is more than doubling.
Going to 2.3.
Yes. If approved, but that's also, right now, that budget process is strange in the ways we've talked about, so it's not like an official one, but were we to calculate it the same way we're calculating this, it would be around 1, so it is a double, yeah.
Thank you.
How does long-term, how were raises given to the employees based on this, like, vote?
Do you want to answer
Yeah,
that, Kate? 'Cause I know that
sure.
for a lot
So-
of the investment professionals, they hadn't gotten base salary adjustments for
Right.
a period of over 9 years.
Was that part of this plan? Like, I know they'll have a rate, this will be a substantial raise, but just going forward, is there a system?
It's one jump, right?
Hell of
And
a
then-
jump.
Yeah. But think about it this way, Sean.
I am good.
So if people had gotten
Yeah.
the compensation back in 2015, didn't get a raise, this inflation's eroded 31% of their purchasing power. So
Yeah, 100%.
they said listen, I'm not cavalier with somebody else's money. Those are big dollar amounts. But there is a logical basis for it. And I do think the real issue is what are we going to be able to do for that? I'm very clear in my mind that we'll be able, with the right number of people and the right level of staffing, meaning really good quality people, we'll be able to move much faster.
Yeah, you're talking on a go forward basis,
Yeah, go
right?
forward
So
basis.
I think the intention is that next year we would come to you in the trustee service compact and if we were to be asking, we certainly wouldn't be asking for another major increase like this. But for example, for COLA, if that's what
Yeah,
you're
that's what I'm,
thinking of,
yeah, talking
it
like,
would be contemplated in your trustee service compact for the following year. And that's where you say, okay, well, COLA and your budget will increase by whatever, 3% or not.
cool.
Okay, I actually think that ends our presentation unless we have any other questions from any trustees or any folks in the room.
All right, so that ends part one. We ready for the second?
Okay.
Uh,
That was a brisk.
All right,
brisk
are there
motion.
any,
Yeah.
okay. On behalf of the board, let me thank Steve and Kate for their presentation. I don't believe that there are
That's a great
any other
question.
items in public. So, with no objection, I'd like to make a motion to exit public and enter into executive session.
Second, Liam Guilfoyle. Okay. Can we take a 2-minute?
Okay, so if we, before we do that, if we could just, shut the recording, please, or turn off the recording.
During the executive, during the executive session, the board discussed various investment matters. Now we like a motion to adjourn.
Motion to adjourn.
Second,
Thank you.
we stand adjourned, so thank you, Bam, if you could turn the recording off, please.
And lunch is in the boardroom.
Thank you.
Break room.